So the question is, what do we do with equipment after you already, it's paid for, you own it outright, it's still in good shape, you expect to get another 10 years out of it. The day will come when you need to replace that piece of equipment. You need to continue charging for that piece of equipment. I don't care if you're paying a loan or whether you own it outright. That equipment is still depreciating. Repair expenses will start to climb. The whole point of recovering equipment in your budget like this is to determine what that piece of equipment costs me in a year, and that amount is what I add to my overhead budget. The calculator will do the math to figure out your cost to buy it outright, how many years you're going to own it, what you're going to get back out of it when you sell it, and it does the math to figure out basically what that machine costs you in depreciation per year. And that is what gets added into your overhead budget. But I always say, when you plug in those numbers, budget in worst case scenario for the purchase price, worst case scenario for when you sell it. Don't think, oh, I can get 30 grand out of that thing, and then it's like, man, I got to unload this thing right now, I'm only getting 22 for it. Budget worst case scenario in both places.